All right, so Facebook rallying, pushing through the upper Bollinger Band, now retracing just a little bit. And a minute ago, it looked like we might have a bearish engulfing candlestick here. If we get a bearish engulfing candlestick here, or we retrace and then push higher but not to the upper Bollinger Band, what do you think I might be thinking of doing here on Facebook? I'll give you a hint. Day trade. David says, getting out, failed breakout, Bollinger Band top. There you go. Ken says the fade in the lunch. Question is, if we get a bearish engulfing candlestick here on Facebook, what might I be looking at? And the answer is definitely a fade in the lunch. Right? If I get a bearish engulfing here, or I get a Bollinger Band topping pattern, stock's made a pretty nice move. It's not a huge move, but it's big enough. Especially given now, because it's a day trade. Take a look at this. What direction has the S&P moved today? What is the directionality of the SPX been today? None. Correct. Okay. It's been up a little, it's been down a little. There's not a whole lot there, right? But despite that, Facebook has done this, right? So is Facebook stronger than, weaker than, or more or less equal to the S&P? It's obviously significantly stronger than. So a fade here into lunch, just taking that counter trend move, buying put options on the first signs of weakness in the stock can give us an opportunity to potentially make some money. And the beauty of it is where we're at right now, and I don't know how this candlestick's going to develop, but I'm certainly paying attention to it, is that it could turn into a very nice entry opportunity because of what we're seeing here with regards to our stop. Okay, so here's what I'm looking for. We trade below that right there, and I'm in. There it is. All right, so I'll let this candlestick start to develop while it's developing. Now, this may turn into a rising 3, which is fine too. Because if it does turn into a rising 3 and fails to break above the upper Bollinger Band, then I've got my signal anyway. So kind of watching that one for a possible setup. So here's your rally on Facebook. So a stock like Facebook, the chart is talking to me, right? And what is the chart telling me? Is the rally, is the buying pressure, the attraction to buyers, is it gone yet? Are buyers running away or pushing back a little bit on the price? Have they become dissuaded by the price? No. This is rally mode, exactly correct, Ed. And so when you look at it from that perspective, guys, think of it this way. Anybody ever really want to buy something, some piece of merchandise, a piece of jewelry, a watch, a car? Anybody ever been in that situation where you really, really wanted to buy something? You saw real value in it. You decided, you know what, I'd really like to own that. And okay, so you look at it and you say, you know what, I really like it, but I don't have the time for it right now. I'm not going to buy it right now. You go back a month later and the price has gone up, and it's gone up a chunk, but you still see value in it. You're like, man, that's really going to look good on me, and I still like it. I still want to buy it, but I don't have the time to. You come back a month later, price has gone up. Okay, so you look at it and you're like, man, I mean, I really like that thing, but crap, now it's starting to get kind of expensive, but I really, really like it and I really want it. So I think I'm going to think on it. So you go home and you think on it, right? And you come back a month later and the price has gone up again, and now you're like, there is no freaking way that I'm buying that thing for that price. Okay, that's all this is, guys, is that people are looking at this, and there are people who come in and they say, I like me some Facebook at 118.10. So they buy, right? Now, there's other people who thought about buying there, and they're like, no, I'm going to wait. And it gets up here to 118.47. They're like, you know what, I'm going to wait and see if it gets cheaper. They come back 10 minutes later, it's at 118.75. And they're like, crap, it didn't get cheaper, right? And so at some point, some people are going to jump in here and they're going to say, well, it's obviously not going to get cheaper. I'm going to have to just jump in now. And so they bite the bullet and go in, and it goes higher. And right now it's continuing to do so because of that. What Ed called rally mode there is exactly that. It is fear-based. It is the fear of missed opportunity that has people bidding the stock up. And all I'm doing as a trader, as somebody looking for the counter trend move, is waiting for that moment in time where it becomes so expensive that people are like, I am not paying $119.25 for Facebook. Y'all can forget about it. Well, that's the moment that I'm looking for. And when that moment happens, when that chart tells me that that moment has happened, I'm going to jump in and take advantage of a counter trend move by going in and buying a fairly high delta option at the 120 strike price that's only going to cost me $1.18 right now. And I have a clearly defined stop exit, which would be that previous wick, that high right up here that we just put in. So I'm going to buy those right here, assuming that we start trading lower, because I can see that we have not been able to push to that upper Bollinger Band. When in fact, as soon as we started to break down. So they're starting to get a little bit hesitant about buying the stock here. And that's what I'm looking for. That's what I'm looking to exploit, is that hesitancy to buy at those higher prices, because I know that if they won't buy it at the higher prices, the only option the market maker has is to bring the price down. Does that make sense to everybody? So Brian asking a question. He says, Bill, considering that today is Thursday, would you agree it would be wise to roll into next week's option later this afternoon? Possibly. Depends entirely on how much intrinsic value you have in your option. We're going to keep an eye on Facebook here, but at the same time, I'm going to teach a lesson because I'm just that good. You guys keep an eye on Facebook. If you see what looks like maybe an entry, we'll take a look at it, and we may not get one during the lamp. If I have a stock that's trading at $112 a share on, let's just say Tuesday, okay, and I buy, and I buy to open the 113 call option on Tuesday, okay, and I spend, I don't know, $1.60 on it. How much intrinsic value does the 113 call option have when the stock is trading at 112? How much intrinsic value is in that option? Stock's trading at 112. We buy the 113 call option. How much intrinsic value is in that option, guys? 0 would be the right answer. There is none. It's all time value. That option is all time value. It has no intrinsic value whatsoever. If, however, on Thursday, our little $112 stock has moved to 116, how much intrinsic value does the 113 call option have now? It's going to have $3 of intrinsic value plus what? A little bit of time value. Let's call it 15 cents. Our option now has more intrinsic value than time value. How much time value could I lose overnight here, Brian, if I hold this position from Thursday night to Friday morning? If the option is now trading at 315, the overnight time decay at it, so the most I could lose, time value wise, remember this option, if we break it down, has $3 of intrinsic value and 15 cents of time value. So the question is, what is the most I could lose? Worst case scenario, 100% of the time value decays overnight. What is the most I could lose from Thursday night to Friday morning, assuming that the stock does not move, but the time value collapses? 15 cents. The most I could lose here is 15 cents. The most I could lose is 15 cents. Time value-wise, the most that this will cost me from Thursday night to Friday morning is 15 cents, and it's not likely to cost me all 15 cents. You see where I'm going? In this case, if I am deep in the money on Thursday, if Thursday I am deep in the money, I am not rolling my option out. There's no reason to, right? I don't have, unless, now I won't say there's no reason to, unless I'm looking to reduce risk and or increase my leverage. If that's the reason for the rollout, then the answer is yes, but that would be on any day, right? It doesn't have to be on Thursday. It could be on any day. Your question was, because today's Thursday, do we consider rolling our position out because of overnight time value decay? And the answer is yes, if time value is a consideration here. In this example, it's not. So the deeper you are in the money, the less concerned you are about time value decay. So it's just when you have significant exposure to time value decay. Exactly. Brian says, great lesson. I needed that. Thank you. Yeah. You know, I'm never in a hurry to get rid of a deep in the money option.